Hello and welcome to the business edition of PM Express with me, Philip Nanfuri. Now, for the past few days, we've been looking at the budget statement, the 2020 budget statement, and we've been very focused on the issue of revenue mobilization in the country. And as such, we would like to put it into perspective on tonight's show. We've heard lots of arguments about we need to raise the tax revenue, raise the tax numbers, raise revenue in general, not only tax, but non-tax revenue also, so that we can fund our expenditure, because year in, year out, we have what we call fiscal deficits, differences between your expenditure and your revenue, when your expenditure is more than your revenue. So we're going to delve into that tonight, but we want to find solutions and see which options are more practical in raising the revenue chances for the country. I've put together a number of infographics. I want us to strip down the revenue line items and see what exactly goes into feed revenue. When we talk about tax revenue and tax revenue, revenue and grants, what are the line items? So I have a number of infographics for you. Then we'll look at data from a number of fiscal years and see how much we raised in tax revenue only and how much we raised in domestic revenue also. So I wanted to start with the first slide or infograph, and as we go along, I'll explain it to you. So there you have, if you take a typical fiscal table, and by fiscal table, a table that shows government expenditure and revenue, you see on the revenue side, you see total revenue and grants. Then under that, you see what we get for total revenue only. Grants come from donors, etc. Then under total revenue, you have tax revenue. Then under that, you have direct taxes. And you can see direct taxes, company taxes, taxes on oil, other direct taxes. Then you go to indirect taxes. You have your VAT, value added tax, domestic tax, imports, petroleum, and other indirect taxes, into bracket the excise. That's from the Ministry of Finance. And the next one, you go to international trade taxes. Underneath, you have import duties, export duties. Then you have import exemptions. Then you have the National Health Insurance Levy, customs collection, domestic VAT collection, and SNIT contribution. Let's move on to the next one. That will show, so you have other revenue measures. Then you come to the non-tax revenue measures. Then you look at other revenue. Then you go to the grants, and you can see in the project grants, program grants, HIPC assistance, that's multilaterals. HIPC is highly indebted poor country. Multilateral debt relief initiative, I beg your pardon, International Monetary Fund, World Bank, and the African Development Bank. So these are the bodies that typically give us grants. Now, if you come under tax revenue, you see taxes on income and property. You see personal income taxes, self-employed, company taxes on oil, and others. So that's for the tax revenue, and then taxes on income and property. Then you go to other direct taxes, royalties from oil, mineral royalties, national fiscal stabilization levy, which became a bone of contention at the most recent or the 2020 budget reading, and then we have the airport tax. So that's basically for the tax revenue. Then you also have taxes on domestic goods and services, excise duty, petroleum tax, VAT, domestic external. So if you're looking at your budget statement and you're not familiar with these, don't be confused. It's just a breakdown of where government is taking money from various sectors. You see the National Health Insurance Levy there, broken down into a number of components where government can rake in these levies from: customs collection, domestic collection, and then communication service tax, the CST, which we talked about a lot. Then we go to taxes on international trade. Imports, import duty, exports, cocoa, import exemptions. So that's for taxes on international trade. You see in the cocoa, you see in the imports, import duty, exports, cocoa, and import exemptions. So then we have the social contributions. That's the Social Security and National Insurance Trust contributions to the National Health Insurance Levy. So that's it for, I think, tax revenue total. Then I will go to non-tax revenue: retention, lodgement, fees and charges, dividend, interest, and profits from oil, surface rentals from oil, gas receipts, and dividends and interest and profits from companies in which government has a shareholding inside. So if you look at Ghana Commercial Bank, government normally gets some dividends for having a share or a shareholding in there. So that's a non-tax revenue. And very good one I have right in front of you. So you look at fiscal year alone, fiscal year 2012, I beg your pardon, you see we plan to raise 16.9 billion in total revenue and grants, and we actually got 16.6 billion. Now let's skip 2 down and go to tax revenue. 12.4 billion was what we programmed, then we got 12.3 billion. Direct taxes, we plan to raise 5.8, and we got 5.5 for the year 2012. So you see, more or less, we program, and then you see the outturn on the right, what you actually received or what you actually collected. So that's basically just a snapshot of the types of taxes we collect, and then the non-tax revenues we also collect, and the numbers of the fiscal year 2012. So in studio, 2 guests, fine gentlemen. First, Dr. Ebo Duncan. He's an economist, and William Owusu Demitia, I beg your pardon, tax consultant and legal practitioner. They're going to walk us through the understanding and give us further breakdown of the issues. So we're taking a quick break. We'll be right back. You're still live on PM Express, the business edition. This is JoyNews channel. My name is Philip Nanfuri. And before we went on the break, we're looking at a snapshot of our fiscal line items, where government generates revenue from. We looked at tax revenue and tax revenue and the specific items that lie within there. We also looked at data to see how we performed in the year 2012 with regards to what we programmed to collect and what we actually collected. Now, we are very familiar with the causes of our low tax revenue. Compliance issues by those who are supposed to honor their tax obligations. And there's always the case of taxing, or if I can say, taxing the same people with very high rates. So the same people in the country keep on paying the tax. And there's always a talk about the informal sector. We need to explore this and find out if indeed the informal sector that has been touted to be one of the solutions to low revenues will really solve the issue of revenue mobilization in the country. And I'm going to start with Dr. Ebo Duncan. He's an economist, and he's worked a lot in these areas to find out exactly if indeed this informal sector hype can really meet something. Doc, thank you very much.
Thank you.
And I just want to start off and then put this into perspective. So on Monday at the accounting and auditing firm, KPMG, they held their post-budget forum. And in there, Dr. Kwache was mentioning that a lot of hype has been placed on the informal sector because of their small or minimal incomes. But if we aggregate it, it may make some good addition to the numbers. In your line of work, what would you think this informal sector will have, the impact it will have on our revenue generation? Some argue that it's the solution to all our problems. Is it or is it not?
It is not. Yeah. And we should know that at times when we say that the informal sector, they don't pay taxes. Which tax are we talking about? It's income tax that a lot of them don't pay. But when it comes to indirect taxes, they pay VAT, whatever they consume, which is VAT, dutiable, they pay, and all this. So I think when they are talking about they are not paying taxes with the income tax. And the reason why I think that the informal sector is not a game changer is that if you look at the GDP, the informal sector contributes less than 30%. And if you take figures from 2013 to 2018, even 2018, the informal sector contributed 27% to GDP. Now, if you take agric alone is around 21%. And agric is non-taxed. And you can't even, how will you even value the goods of the plantain seller and others to tax? You will not get any efficient tax system to collect taxes from there. So if you take agric from it, then you get the other informal sector being around 7%. And even some of them are paying taxes already. The taxi drivers, they pay their tax stamp. every quarter. The truck drivers, they pay. And those retailers and others, AMA and others have been going there to collect taxes. So which tax are we talking about now? You see, at times they look at the number of employees or the number that sector employs, which is around 85%. So we have a lot of people, the 85%, but what is their output? Their total output is just around 30%. And that 30%, even when you say you are going to even collect income tax, GRA has a threshold above which you can collect income tax. And I think it's 288 for 2019, unless you are earning about 288. From there, the next 100, you pay 5 cedis. And you find a lot of them falling in this bracket. So the law itself even exempts them. Because whether you are informal or formal, if you are earning below 288, you don't pay any tax, you see. So if we hype this informal sector, that will bring in the tax. I don't know what we are really talking about. They're already paying tax. It's income tax that they are, but are they earning enough to pay the income tax? So I don't think we should. And agric takes, a chunk of the informal sector output, about 20% of it, and the whole informal sector is below 30%.
William, I saw you nodding your head as he went on. I see Doc has provided some context for us with regards to numbers, supporting his argument to numbers. And I'm looking at the numbers right here, and the numbers don't lie. So what would you side with Doc with this argument, or you also have a contrary view to this?
Well, I think that it's not a matter of a contrary view, but I think that even if we were enforcing the law as it is now, they would have contributed some amount to the tax revenue we are generating. I think the premise on which Doc answered you was that it's not a game changer.
A game changer.
Which we have to admit. It will not really be a game changer. But with time, it builds in them a sense of paying income taxes. Now, for the informal sector, what the law requires them to do is to pay what we call a presumptive tax. So we have a rate that we allocate to everyone, depending on the nature. So if you pick the income tax regulations, they are categorized into 3. A, B, and C, and depending whether you have small, medium, and large, you have an amount that every quarter you are supposed to pay. If we were even enforcing that aspect, it would have brought some amount to the national kitty. So I think the call that we should get the informal sector to pay taxes may be what is already existing, not that you are bringing new taxes, but in the income tax sector where they are supposed to pay a flat rate every quarter, that amount, we are not even enforcing it as we ought to. And there are some challenges. And I always tell people that there are 2 things we are not looking at when it comes to the informal sector. You are unable to identify them. And even if you identify them, the means of collecting the money from them becomes problematic. Okay. So you get to someone selling plantain, and you tell the person every quarter you are supposed to pay 30 Ghana cedis every 3 months. Fine. The person will be willing to pay. But at what point should the person pay? Should the person close shop, walk to a GRA office, be in a queue to pay the 30 Ghana cedis? Obviously not. So the question is, how have we brought technology to bear to ensure that these people, from the comfort of where they are marketing, are able to honor their tax obligations? Today, you can use Momo to renew your national health insurance, but you can't use Momo to pay taxes, income taxes to GRA in Ghana. Why? These are some of the things that we are talking about, leveraging technology to ensure that you are bringing it to the doorstep of these informal people, so that at the comfort of wherever they are, whether it's a barbering shop, wherever they are, they can honor their tax obligations and get a receipt. So these are the things we are looking at. When it comes to income tax, we must identify measures that help us to be able to walk up to them and get our needed presumptive tax.
Let me just follow up on this, William. Do you see anything in GRA, and you are playing in these tax circles on a daily basis, do you see anything in GRA that presupposes that we would get such a system in the not so far future? Is there something that we can see working for us?
Yes, I've seen at least a step. For example, this year, people were able to file their returns for income tax returns. Some people were able to file it online. Okay, that at least is a good improvement. But we need to move beyond that. it should not just be income tax returns, which is filed annually, annual income tax returns. When we move to all forms of returns, I should be able to file my return from the comfort of my home. I should be able to leverage on money paying systems to be able to pay my taxes. I know there are reforms going on. That I admit, there are reforms going on. Probably from where we sit, we expect that the reforms would be able to materialize overnight. But they may have their own institutional and capacity challenges which they may have to overcome. But yes, there are plans that are being implemented, but probably the rate of implementation is what we call for a speed up on. Yes.
Doc, so you have said that the informal sector tax measures will not be a game changer. To borrow your fancy words, then Asamasa, there's nothing really we can do. So what else can be done for us to ensure that we prop up the numbers? Because I think the argument has been the informal, and your argument is very sound. So if we can't really get a lot from the informal, where can we raise the most from? Because I'm looking at 2020 revenue target. Total revenue, 67.1 billion. Grants, let's take that out, 1.2 billion. Let's take out non-tax revenue of 13.1 billion.
Yeah,
so we're looking at roughly
45 billion
for
non-oil tax revenue.
Yes, and I see a jump from
42, which
from the 2019. Yes, so so then so how then can we do this? Because to the uninformed, it's like, okay, so then what else can we do?
I think if you look at paragraph 585 of the budget statement, the minister mentioned some measures that will be like plugging the revenue loopholes. It's an area which they have to take it very seriously. Though we are automating the systems, still there are loopholes there which must be plugged. At times, people use the laws, loopholes in the laws. So if you get these tax experts and they are lawyers,
William,
they capitalize on the loopholes in the laws and then make sure that they help. That's also their work. So they help some of the businesses to avoid some of these taxes. And actually, if that is not stealing and that is not, there's a hole there.
There's a hole there and they're taking advantage of it.
Yeah. So these are some of the areas that they have to plug. If you, I think other areas like transfer pricing and others have to look at, because almost all the mining companies don't belong to us. They have parent companies outside, and transfer pricing is being done a lot. I think last year or some years back, GRA wanted to, look at it critically. And improving tax compliance is also one of the things that the finance minister said. And another one was changing tax culture. And changing tax culture, I was thinking, what really does it mean?
To change the culture.
To change the culture, to make people see that they have to pay tax. Fine. But now, if people are not seeing, some people say that they don't see what the taxes are being used for, so they will dodge. Now, let's take an area like property rates. If road leading to my area is good, you have drainage system and then all this, when someone is paying property rate, it's not, a big deal. Where I'm staying right now, if you go there, your car will swim before it gets to your house. You see? So immediately you say, tax culture, I have to pay tax. I know. But paying this tax, property rate, my road is still bad. I have to put my car into a good shape and I have to pay 5,000 for the repairs. You see? So collectively, if some of these things, changing the tax culture, we should also know what the taxes are being used for. Because my area, for instance, we say that, oh, property rates, we will pay. but we want to see improvement. How the roads is so bad, no drainage system. So tax culture, fine. We should know, they should sensitize us to know that we have to pay our taxes. But we should also, people would like to see what those taxes are benefiting them. Because when you take the benefits rule of taxation, you pay according to how you benefit from it. So they have to also look at it. And then he also talked about expanding the tax base. Now, I think Willie has talked about that even if small monies come in, and told you already that taxi drivers and others, they are paying this. Yeah. And those who have shops, for instance, they are also paying this flat rate. And if barbers and other hairdressers, they pay these flat rates. So we should find a way of making it, I mean, the cost of collecting these taxes lower so that we can, I mean, reap, I mean, enough. But the revenue loopholes, those are the areas that you have to look at very well. And there are a lot of loopholes, not one side. I mentioned transfer pricing as one. We have other areas that we can look at.
Doc, can you just do a brief breakdown of transfer pricing? Some say it's very complex. What is the simplest explanation for transfer pricing?
Well, the simplest explanation is that Anglo Gold, I'm taking Anglo, it's just an example.
Hypothetical, okay.
And we have the parent company in South Africa.
Okay.
So I produce my gold. If I say maybe, let's say 1,000 cedis an ounce, and actually the price should have been maybe 1,200. So 1,000 cedis, that's what I sold to my parent company. You will finally sell it. So you see that the price that you give to your because you are giving it to your parent company, the price that you give. But meanwhile, actually, if you were to sell it yourself, you are not going to sell it for that 1,000.
Okay.
So that is how this, that's the simplest explanation for this transfer pricing. Maybe the tax expert may have other.
I'm coming to William on the tax avoidance issue. Doc says smart gentlemen like yourselves are doing business. I mean, I remember Professor Abo, former Dean of Western Ghana Business School, in one of my classes, he was telling us evasion, avoidance. Avoidance, some may deem it wrong, but you are taking advantage of the loopholes in the system. The evasion is where the problem comes in. Where you sit, William, you have access to information, data, etc. If we close these loopholes that your category of friends help get businesses out from, will it really, Doc is saying that it will feed into the revenue numbers in a positive way. Do you think it would?
I agree. You see, the problem with revenue laws is that they are complex. In the complexity, they create gaps unknown to the policymakers. We call some things unintended consequences of the law. And so if you know the law very well, you can exploit it to your advantage. And in the statement by the minister, he made mention of that they were going to do a comprehensive review of our tax laws to identify the gaps and be able to take in measures. There's a project that is going on which we call base erosion and profit shifting. It's been spearheaded by the OECD, Organization of Economic Cooperation and Development. They are spearheading that project. It started sometime in 2015. And Ghana is yet to include some of the measures and the recommendations in our law. So in the budget statement, the minister mentioned that they were going to take steps to be able to include that. And if we do that, it will limit the opportunities that are available for tax planning. Because if there are gaps and you walk up to me and ask me, William, how do I reduce my tax liability legitimately? I will help you do that. It will not be that I'm not being patriotic, but I'm being patriotic in that I'm telling the citizen of Ghana not to pay more than what the law expects them to pay. So I would expect that the law would let them pay their fair share. And so whenever anybody walks up and says, William, how do we improve the law? What are the gaps in the law? willingly will be able to submit or make recommendations. So in my presentation to Parliament, I said that we need to be able to do stakeholder consultations and be able to identify the various areas in the law we need to. And transfer pricing, as I said, is a major issue. Thankfully, we have new transfer pricing regulations that have been given assent by management on GRA. Okay. And the minister said it in the statement that it was going to be passed into law this year. We hope that that will come on stream. But the only recommendation I gave was that there should be a time lag between the date of passage and the date of commencement so that people can comply. Okay. There are beautiful things in the new regulations, as I've seen, beautiful things. Because now, as the regulations sit, any transaction, irrespective of the quantum and amount, you must build what the law calls documentation to support it, which is quite onerous. So there's a simplified approach in the new, wonderful provisions in there. We must have the courage to pass them into law, train people, let them understand their obligations, and then we can move ahead and plug those loopholes when it comes to issues of transfer pricing and stripping income out of the country.
Okay.
Then, Philip,
yes,
I
please.
think to add to what William said, all what we are saying, I think we've left out tax exemptions. And there's a bill also on
it really
it.
came,
Yeah. Because if you look at exemptions, the quantum, so huge. It's so huge. So if you are able to also reduce that, it will also help a lot.
The Institute of Fiscal Studies was also calling for the passage of this bill. I think sometime. I think it's been part of the cause, but I think this week there was a highlight of it again, particularly in the wake of this 2020 budget reading. I want us to do something on the GRA, and they are essential or critical to this whole revenue mobilization, particularly the tax side. The minister has made mention that they want to beef up their operations. There's a new wind blowing, if I can call it like that, with Professor Ade being on the head of, being the board chairman and all that. Is there anything else that GRA is missing? Both of you are experts in the field. I'll start with William on this. Is there anything else they are missing in terms of capacity, in terms of resources? And let me add this one in there. I was asking Dr. Duncan whether it is sensible to tie compensation to GRA management and board, even though they're not a private entity. Is it sensible that we say, okay, you know what, if the Commissioner General and his folks don't achieve our targets, then don't get this. If they achieve this, then they get this. Is that really a sensible argument to make?
Yes. For GRA, I think the GRA Act was passed in 2009, which consolidated 3 distinct revenue agencies: the IRS, then the Value Added Tax Service, and then the Customs, Excise and Preventive Service. 10 years down the line, 2019, there is reviewed some institutional challenges. Now, the integration, as far as I'm concerned, has not fully developed. So, for example, if I import an item into Ghana, I expect that the moment I am required to key in my taxpayer identification number and I use it as the consignee and I clear the goods, domestic tax, which is those looking at income tax, VAT and the rest, must automatically know that William has bought in goods worth 100,000. And so if William is to do his sales revenue and the sales revenue shows about, say, 80,000, given that he sold all the goods, it means there's a disparity between the value I declared at the port for income for duty purposes and the amount I'm declaring as income tax. That integration, that networking, that talking is still not being fully realized. Yes, you can always go back to GCMS and get it, but it's supposed to have worked in real time. And that is one thing they keep missing. So you would always have to have an audit trigger that they'll go back and do the checks and verify. Apart from that, if you look at the structure, the organogram of GRA, you have 3 commissioners. The Commissioner General is the administrative head, but you have 3 commissioners in charge of the divisions. You have domestic tax revenue divisions. It takes care of income tax, VAT, excise. And you have customs division, import and export. And you have support services, every other thing, HR, admin, finance, whatever. Now, the problem we have faced is that if you work in tax practice, mostly the commissioner in charge of DTRD, the domestic tax, usually would have his desk being full with a lot of appeals going up to him. So if a tax office in Legon does something I don't like and I write to them and they do an audit and it's not good enough, it will have to flow up to the Commissioner of Domestic Tax Office for a possible resolution. If you cannot resolve it at that point and Commissioner General is unable to resolve it, then you go to court. Well, some people have argued that this line where everything flows up to one person's desk is a bit cumbersome and problematic. Can we zone Ghana such that we can have the northern zone, or we can have the south, the middle belt and the southern zone, each one of them headed by a commissioner who can take decisions based on the inflow of things that are coming in a reliably fast manner? And so some people have argued for that. We need to look at the structure again. As we have it now, we have large taxpayers, medium taxpayers, and small taxpayers based on turnover. So there are some offices, you call them MTOs. They don't deal with small taxpayers. There's just one LTO here at Dubai Circle. So you realize that this classification and the way even the offices are organized are such that it may be problematic for you to get everybody within the loop. So there's a need we look back at the institution itself. Yes, we've seen movement in the top management. There's a need to build capacity. It's always the case. You can never finish building capacity. There's a need to deploy technology. It is also good. But we need to look at how the institution itself is structured and call for stakeholder engagements. And I always like that. Call for stakeholder engagements, get fresh ideas, and see how we improve the revenue to become what we desired it to be when the integration started in 2009. And that is what I will call for in this reform.
That's a good one. We're taking a quick break here. This is the business edition of PM Express with me, Philip Namfuri. We'll be right back. We're still live on the business edition of PM Express with me, Philip Namfuri. My guest, Dr. Ebo Duncan, economist, and William Owusu Demitia. He's a tax consultant and legal practitioner. Before we went on the break, William was giving us a breakdown of the structure of Ghana Revenue Authority and Customs Division. And more or less, things can be done a wee bit better to improve the revenue collection in the country. I want to come to Dr. Ebo Duncan on what I call GRA's Rambo style of locking up officers to compel them to honor their tax obligations. And Doc, some have argued I choose Rambo advisedly because I feel like it's a bit, for lack of a better word, buga buga. Yeah. Do you think this is a good way for the GRA to draw revenue from these companies that they are failing to honor?
I think the reason why they do that, they want to name and then shame that the company is not paying taxes. Now, some have also argued that if you lock the company up, it means that they are not working. And I don't know the number of months or years of default that warrant GRA to do that. If it is just a few months, less than 6 months and others, I think they can just allow them and then make arrangements for the payment, give them time. If they exceed and still they are not paying, then yeah. But if it is maybe 2 years, 3 years still they are not paying, then something of that sort can be done. And I think the minister during the budget he said that now a procedure that defaulters, they will take them to court so that they will expedite action on this tax non-compliance issues. And I think it's good.
William, do you agree with the style of this? And I think first and foremost, for my education, is it grounded in law, this closing of the company? Is it grounded in law? Does the GRA have some power to do that, to draw out these revenues from these companies?
Yes, yes. If you look at the Revenue Administration Act, it calls something distress proceedings, where they can distrain goods belonging to a taxpayer who is in default in a particular location. The law gives GRA several powers apart from blocking up the shop. And sometimes that is why people say that that should be the last measure you take. If, for example, and I tell you this, the law gives GRA the power to walk up to anybody who owes you and tell that person that when the debt is due, they should pay over to GRA on your behalf. So if, for example, you have money standing to your credit in a bank account. GRA has power under the law, the Revenue Administration Act, to write to what we call third-party debtors under Section 60 of the law and tell the bank that you owe them so much. So whatever money is standing to the credit of your account, they should pay it over to GRA. GRA has the power without a court order, interestingly. So there are several powers that are given to GRA under the Revenue Administration to enforce collection. And sometimes people feel that going to the point of locking up the shop should be the last measure, when, as Doc said, when all other measures are being explored that you don't seem to see headway. Because so long as the business is not operating, they are not generating income. If people are sitting at home, then they are not earning income as well. They don't pay income taxes. So sometimes you must look for other innovative ways to be able to raise the revenue. But as I said, there's a policy going on. They call it name and shame. But my only problem is that you may do it to people who have genuine reasons. And I've seen that before in my practice, where people's shops have been locked up based on misinformation. So, for example, the task force going about locking up the shop picks information at a particular point in time from a particular office. Matters may have progressed beyond that and they may have paid to a certain extent, but the task force doesn't know. So they walk up to that place. They don't even know that the matter, an objection has been raised on the assessment and that is even being determined.
And sorry to interrupt you. I think, will it be safe to say this all goes back to the integration you spoke about?
Yes, precisely. And I'm saying that they are not working seamlessly as we thought they would, because the information flow, at first when they were in 3 distinct units, we thought that it was information asymmetry that was not getting us to, and the synergistic effect of coming together would help. But it appears that they are not still talking. So as I said, the task force, all you need to do is to generate a list as a local office and say that ABC owes me 100,000 Ghana cedis, CD whatever owes me this, and you send it to the task force. By the time the task force gets to the office of ABC, they may have come to the local office to pay. But because in their list, they don't have the updated, it becomes a matter, okay, let's lock it up. We'll go and verify and come and open if it's true. So these are some of the things that happen. I'm not saying that all of it is that way, but there are some genuine concerns about how people are shamed when in fact their liabilities are being contested, even within the internal GRA administrative process and some even in court.
Let me just do a follow-up and then come to Doc on this. The finance minister speaking at KPMG's post-budget forum on Monday again also mentioned at the end of his submissions on the panel discussion that they are thinking of setting up specialized or special courts to deal with some of these issues. Will that be one of the ways in dealing with these delays that also seem to interfere with or seem to slow the process of getting in revenue? Do you think a special court to deal with the revenue-related challenges will be a good measure?
Well, if you look at Ghana's tax and legal structure, the High Court, if you look at the Revenue Administration Act, basically, the High Court is the next step to go after you have exhausted the internal administrative procedure of GRA. What I know are in the works, the draft has even been done, is to set up an appellate body between Ghana Revenue Authority and the courts, so that they will have an independent review by experts of the job GRA has done to find out whether it meets the standard before, if the person is not even satisfied, it goes to court. There's that intervening factor that is being mooted because most countries have that tribunal that works. And so there's the hope that if that is, for example, instituted and the panel are independent and competent as the law requires them to be, because if you look at the criteria and the law for people who should be appointed, you see very stringent measures. If they are independent, then obviously if I appear before the panel and they tell me that, William, your client does not have a case based on ABCD and is sound, I don't have to go to court and litigate for years and the matter is ended. So I think that is what I know is being discussed as of now, that we have to pass a law that institutionalizes that appellate body that will sit between GRA and the court. Because as of now, what happens is that if you want to object, so for example, I'm serving the assessment of say 100,000 and I want to object or to say I don't agree, I'm dissatisfied with the objection, the law requires under section 42 of the Revenue Administration Act that if it's anything apart from customs duty, I have to pay at least 30% of the amount in dispute, even before I'm heard, unless the Commissioner General decides to waive it. So imagine, the person telling you to pay before you are heard, you have to go back to the person and ask the person that he should take away the requirement of the deposit before he hears you. So he's taking a decision. Instead of going to another body to review his decision, he has to review his decision himself. And these are some of the challenges you see, and that's why people are mooting that we should have the appellate body. So these are plans which we believe, if they are implemented and implemented well, that is always my issue. We have beautiful ideas. The implementation becomes the problem.
I see a lot of red tape in what you just said. I see a lot of red tape and conflict of interest.
Yeah.
Just going back and forth. Doc, will you put your back behind a special court to solve some of the issues? I know he's outlined it for us, but do you think it's something that would help deal with some of these challenges that we are experiencing?
Yeah, I think what he has explained, I think is fantastic. If we go that way, it's fantastic. Getting an intervening committee or body that will deal with it before finally it goes to court. I think it's a fine idea.
So you see, if I was sitting somewhere, I would say, William should go and head one of our tax units and then ensure that all is well, and then maybe Doctor can head another one. So in all this, the key thing I ask myself is, we've given ourselves a very high target. Some argue it's high, others think it's realistic. The debates are going on and on. In your professional opinions, 2020 targets, and not to, let me just say, okay, to be clairvoyant, see in the future, put on your wizard's eye or your witch's eye, and tell us if indeed, given what the trends have been in our fiscal regime, can we even get close to this target we set for ourselves, particularly on the domestic revenue part? I want to start with Doc.
Yeah, okay. I think what has been set is 49.2 billion. And looking at this year's projected outcome, which is 42.4. So it means that an addition of 7 billion. And we're plugging of the holes and then all these things alone close that gap. It's very difficult to say. And I think it's not this revenue measures only that can close it. As the economy grows, you also collect more taxes. As the GDP grows, you also collect, more taxes. So it depends on how strong the economy will grow and whether growth will come also from the taxable sectors. Because if growth is led by agric, you don't expect to get so much tax from there. But when it's from industry and services to some areas, you can get those. But 7 billion...
it's a lot.
It's a lot. It's a lot. It's a lot. If they're able to achieve it, it will be very good. But I think it's a lot because there are no new taxes that were put in the budget for 2020. So it means that the tax already in the system is what is going to be applied. So plugging the revenue loopholes, the compliance, and expanding the base that they are talking about, and growth in the economy. I think. But still, I think it's being very ambitious.
William, 7 billion achievable?
Well, I'll say that I've seen a trend. We've been increasing year on year our targets by about 6 billion on the average every year. And if history is anything to go by, we have not really met them. Sometimes then we get very close, but we don't. We've revised our revenue targets for 2019 twice. One, at the mid-year review of the budget, and two, when the 2020 budget was read. We revised all of them downwards because we didn't expect to get the revenue that we were hoping.
Sure.
So next year, if the assumptions are right, and I always say that the assumptions we make, if these assumptions are right, and if next year we are to have a stringent exemptions regime policy in place, we may be able to get very close, if not meet it. So we need to be able to do all that we have said we will do and make sure that we do that in the spirit of doing what is right. Because I've always said that we have wonderful ideas. Implementation becomes problematic. So two things, exemptions which deny us the needed revenue. 2, plugging the loopholes, as we've already said, where legitimately people do not pay. 3, leveraging on technology to enable us collect taxes in an efficient and effective manner. And we cannot rest on still identifying taxpayers. The last thing I want to say, Philip, is that, you know, funny enough now, if you want a person to get a taxpayer identification number, the person has to physically walk to a GRA or a TIN, what we call a TIN center, and register. I've always asked, why can't we use biometrically verified data to generate it for them automatically? So I can say confidently that anybody who contributes to SNIT should almost always be a taxpayer, a person paying tax. You understand? So if you have the SNIT contributors, these are biometrically verified people. SNIT has biometrically verified data. Can GRA be talking to SNIT, get the data, and see if they can generate taxpayer identification numbers for these people, identify them, and find out if they are complying with their tax obligations as well? These are questions we need to ask. Do we really need to wait for them to walk up and actually get it when we can have their data and generate one for them? These are questions I've always asked. Can't we look at it that way? If we do not identify taxpayers, we cannot track their income and we cannot get them to pay their appropriate taxes. So identification, tracking, and making sure they pay their appropriate incomes by way of compliance enforcement.
The road is long and weary, but I'm sure with the right push, we will make it. My guest, one who just spoke, William Owusu-Damitia, is a tax consultant, legal practitioner, and Dr. Ebo Duncan, economist. Fine gentleman, as you could see, very calm, very reserved, but then he makes the input, he makes the impact. I want to say a big thank you. My name again, Philip Nanfuri, and do have yourself a good evening. Bye.